This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, a dovish message from the US Fed and, of course, more stimulus from Washington saw emerging market stocks scaling two-month peaks today. MSCI's index of emerging stocks jumped 0.4% on the day, extending a recent multi-day run of gains. Now, South Africa's JSE firmer today, along with its global peers. The JSE All-Share has barely been moving in recent weeks, but the stocks that derive most of their income in South Africa have made a strong recovery today. Now, also coming up on today's show, we'll be looking at global oil production concerns brought on by COVID-19. The U.S. economy picks up in the first quarter as recovery continues. And you can't miss Uganda's 3D metal signage designed to lure more customers. Well, we kick off tonight's show with some good news coming out of Zimbabwe. Treasury authorities are reaping the dividends of keeping a tight leash on money supply and reforms in order to help stabilize the local currency. As CGTN's Farai Mwakutuya now reports, monthly inflation fell to a three-year low in April.
Annual inflation for the month of April was 194%, its lowest level in 2 years, and monthly inflation came in at 1.58%, the eighth consecutive month that has been below 5.5%, vindicating government's stance to stop printing money.
But remember, money supply was behind the volatility we saw in inflation, as well as the depreciation of the exchange rate, which actually drove the inflationary prices that we saw in the market.
Sustaining the gains depends on keeping the foreign currency auction adequately funded, the outcome of tense wage negotiations with civil servants, and managing payments for a bumper grain harvest.
I don't think we'll see a double increase in terms of wages, but probably the fear is on the maize purchase, where we are looking at about 60 billion. As much as government is saying that it will not be inflationary because it will take about 6 months. But remember, farmers are delivering now, and they need to be paid probably 20 billion in the first 2 months of our harvest. And looking at what is in the government's coffers, when you look at what they have at the Reserve Bank, it's roughly about $10 billion. When you look at what they have at other banks, it's also not enough for them to be paying the $20 billion.
Government says it intends to get the money through selling the maize to grain millers.
However, whenever there is a good harvest, as is forecast this year, people tend to consume from their own grain reserves first before buying from supermarkets, which could subdue demand and limit how much millers can buy. Farai Mwakutuya, CGTN, Harare, Zimbabwe.
Now, South Africa's post-COVID-19 economic reconstruction and recovery plan includes a green economy component. The circular economy is a key aspect of that plan and will focus on ensuring environmental protection and the sustainable use of the country's natural resources. Here's CGTN's Angelo Coppola with the details.
The country's environment minister says the plan promotes waste recycling, renewable energy generation, revitalizing the ecotourism and forestry sectors, and retrofitting government buildings to improve climate resilience and save on water and energy consumption.
We are running out of resources, are not finite, so we need to make the best use of it as far as possible. And on the other end, disposal sites are few and far between, and it's becoming more and more costly and onerous to actually operate them, run with them, and send materials to disposal sites. And we're losing a lot of value and good sense out of products that's being manufactured.
Government efforts are focused on decreasing plastic waste and increasing the recycling of plastics.
Recycling itself has not quite worked as what it was expected to do. And hence, recycling is not out of the circular economy, but it's actually on the outermost loop of it. So we need to get the best sort of use of products that are manufactured, whether it's locally, internationally, or wherever.
There's been lots of discussion amongst analysts about the circular economy and its possible impact on South Africa's economic growth, but it needs a catalyst.
And one of the key things that's coming to the fore now is actually the extended producer responsibility legislation that's coming to the fore as recent as the 5th of May of 2021. And that will actually become mandatory on any sort of packaging producer or anyone that imports it, to actually ensure that they actually take care of any sort of products that is brought in, and that there would be a levy that needs to be paid onto it to ensure that there's better collection of the material and better use of it once it has seen its sort of end of life as such.
Moving to the circular economy is not going to be a straightforward exercise. It's an ongoing project.
It's still very much a document under discussion. There would obviously be areas of, let's say some industries would be a lot harder hit in terms of being able to need to change to it because of vested interest that may be there. But if one takes the holistic picture in terms of what needs to be done, then yes, it's a much needed initiative that needs to be followed through.
Saving the planet is everybody's responsibility and everybody has to get involved. I'm Angelo Coppola for CGTN in Johannesburg, South Africa.
Well, let's shift our focus now to the outlook for global oil production. Benchmark oil prices continue to rise on Thursday, and that's despite lingering uncertainty about future oil demand, of course, given the resurgence of COVID-19 in some countries around the world. Now, Brent crude was over 2% higher earlier today, rising as high as $68.95 per barrel. WTI crude rose by a similar margin, bringing its price gain so far in the year to 34%. Well, according to OPEC, oil stockpiles amongst the countries part of the Organization for Economic Cooperation and Development rose by 14.4 million barrels in March. They are over 77 million barrels above average levels between 2015 and 2019. Now, with oil stockpiles rising and, of course, the demand outlook still uncertain, where does that leave large African producers such as Nigeria and Angola? Well, CGTN's Ramanyang explored those concerns with Elsie Mbugwa, the managing director at Leadwood Energy.
We've been seeing a downward pressure on their crude differentials, and especially for West African grades. So Rama, these are Bonnie Light, Forcados, Kwa, and they continue to see a deeper discount. So between 30 cents to upwards of 65 cents sometimes. And what that is that deeper discount against the Brent benchmark is on rising export volumes in the Mediterranean. And that has lent the availability of large volumes of unsold cargoes in West Africa. So, as you can imagine, a deeper discount for a lot of these African grades, which tend to be light sweet grades, is less revenue for these African oil exporting countries.
Let's just dig into that for a moment, because and this is a bit of a layman's question, but usually the question then becomes, if you've got all this crude that you're still pumping out of the ground, but it's not essentially moving at the volumes, at the pace that usually they have historically, what then do you do with it? Because demand clearly isn't coming back overnight with COVID being, inflicting the economic damage it's inflicting across the world.
You have to look at the entire value chain to make that assessment. So first, let's start. So China is recovering. Japan is recovering. Of course, that has been offset by India, which is the third largest, importer, and that has sort of, kind of dimmed that recovery a little bit. In addition to that, you have to also remember that during the month of April, which we're currently in, and part of March usually is when you see a lot of refineries go into maintenance, meaning they weren't picking up as many barrels as we would expect. And then the last part that you have to think about, is just what traders do. They're known to essentially come in and take advantage. They perfect the art of arbitrage. And so what we saw last year, around the March at the beginning of COVID, is that they bought up a lot of these barrels and essentially stored them, and on tankers, on land storage, and usually they're kind of waiting it out until demand recovers.
I'm glad you brought up the refinery question, because for a lot of markets that are essentially net importers, like Kenya, for example, a lot of the fuel we import essentially comes from refineries in India. Given what we're seeing in the country, the explosion of COVID cases over there, do you think we might be seeing some potential supply disruptions in the importation of refined fuel coming into the continent?
Yeah, not so much. I think much of it, not necessarily India. I mean, I think that would impact crude oil. And obviously the output from a refinery standpoint, that will certainly impact. But I think on the continent, much of the petroleum products are priced off of Murban crude, which is Middle Eastern. And we haven't seen that part of the world greatly impacted. So no, I wouldn't say that we will see an impact in terms of the flow. I think the sustained oil prices that we're currently seeing right now were completely off of the back of a perceived global economy recovery, which now, again, as I mentioned earlier, is being tested.
Okay, so let's try and look ahead. When OPEC meets again in June, what do you think will have changed by then? What are the factors that they will have to take into account when they're trying to figure out whether to essentially hold their fire or perhaps even cut production a little bit?
It's a tricky place where OPEC is right now, but the path of the COVID pandemic will be the overarching factor impacting the near-term pace of the recovery. So particularly with these COVID-19 variants that we're seeing in India, for example, and Brazil. We're not sure where else it will land. And so I think this will require a lot of vigilant monitoring by OPEC. And so despite all the wide-ranging stimulus that we're currently seeing all throughout the US and Europe, I think what was perceived as the early signs of a return to normalcy, I think right now we're in an awkward, OPEC is in an awkward counterbalancing place. And they will need to keep monitoring it to ensure security of supply. I think one other thing to mention, Rama, I think although not imminent, it's a further rise in inflation, especially in the US and the Eurozone, which may cause some tightening of monetary policies. And also the other thing to watch out for is any trader, sort of elated disputes between the US and China, which if that occurred, could drastically impact demand.
Well, let's now shift focus to corporate headlines today. Glencore has projected profits that range between $2.2 billion to $3.2 billion this year. That is based on the back of a rise in prices for commodities from copper to aluminum. The world's biggest commodities trader has been benefiting strongly from recent price volatility. Last year, it reported record earnings of about $3.3 billion for the unit. Now, that was after profitable bets on oil swings early in the pandemic and a surge in metal prices towards the end of the year. Meanwhile, South African Airways plane maintenance division is cutting jobs to help navigate the economic crisis that, of course, has gripped the air travel industry throughout the pandemic. The state-owned company estimates that about 60% of a total workforce of just over 2,000 could be eliminated. The move comes more than a year after the national carrier and SAA Technical's main customer last flew a commercial flight. Meanwhile, Lufthansa has cut its capacity forecast for flights this year to about 40% of its pre-crisis capacity. That is down from an earlier estimate of up to 50%. The German airline, however, still expects a significant recovery in the second half of the year. And global heavy truck rivals Daimler and Volvo Group have kicked off a joint venture for hydrogen-powered fuel cell stacks. The two companies want to become a fuel cell leader and plan to start ramping up production in Europe in 2025. Now, this comes as stricter regulations are forcing manufacturers to accelerate a shift towards cleaner engines. And that's a look at our corporate headlines. Well, let's now take a short break, still coming up on the show. The African Development Bank calls for improved investment in agriculture. And Africa's tourism sector struggles to bounce back from COVID-19.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay, we'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible? And why?
Let's get some reaction on ground. Joining us in Johannesburg is Uche Okoronkwo. Hello, Nairobi.
This is how whole stories begin. See how they end. Only on Global Business. Africa is the nexus of enterprise, and Global Business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Now, China is set to start buying soybeans from Tanzania as it looks for new suppliers. About 49 Tanzanian companies have been selected by the Chinese government to export the crop from Tanzania into the Chinese market. Here's CGTN's Daniel Kijo with more.
Soybeans are an increasingly important crop for Tanzanian farmers. And now, the government is trying to boost production levels in the country. It's instructed leading agricultural scientists to help increase the amount of high-quality soybean seeds that will meet national and international standards. It has also called on local companies to start collecting soybeans from the regions to increase stock levels. This comes as the country started working on an agricultural product trade deal signed at the end of last year with the world's biggest importer of soybeans, China. Cosmas Bulala has been exporting agricultural commodities since 2016. He says the soybean deal with China could be a game changer for Tanzanian exporters and farmers.
So with this new market of China, the prices have significantly gone up. So it means that the farmers will have more income for their produce, but traders will also have an opportunity for alternative markets in China.
Tanzania is one of 12 countries that will be exporting soybeans to China, but that new agreement is for the same amount Tanzania consumes annually, which is far more than it currently produces. As it stands, Tanzania consumes about 40,000 metric tons of soybeans per year, but internally only produces about 10,000 tons. This additional 30,000 tons of soybeans is imported from Zambia and Malawi. Despite this, experts don't see this as a hindrance, rather an opportunity for local production to increase because of this now guaranteed Chinese market. Program Officer Prudence Mushi says Tanzania's fertile land and non-GMO soybeans will help as farmers here will increase the production of the crop.
Though production of soybean in the country is a bit low, but its quality is very high. That's number one. Number two, potential of the country to produce more is also very high.
In the past, farmers weren't interested in producing the crop because of the lack of access to lucrative global markets. But that has changed. Cosma says he sells a ton of soybean to China at $720 per ton, compared to $600 1 year ago. He says more public awareness is needed to show farmers the profitability of soybean production.
So they are used to growing maize because maize is a food crop. If you don't sell the maize, you can use it at your home for cooking ugali. So it's just that the farmers didn't know and there's no campaign to tell farmers that there's this alternative crop that can be grown in areas where maize is grown.
Whilst production increases, the Tanzanian government says it will also allow companies to import soybeans from neighboring countries and re-export them in order to maintain the market. Daniel Kijo, CGTN, Dar es Salaam.
Now, a recent report by the Red Cross revealed that over 100 million people in Africa are facing catastrophic levels of food insecurity. The COVID-19 pandemic has been the predominant driver of that food insecurity. It also exposed the cracks in Africa's food systems, already under strain from climate change, conflict and pests. However, the experts also say that we are still seeing evidence of agricultural transformation on the continent. The Africa Development Bank says it believes increased investments and expanded partnerships are urgently needed to promote Africa's agricultural transformation through technology and innovation. Well, today, the organization kicked off a high-level dialogue on the issue, inviting heads of state, multilateral development banks, development partners, and private sector operators, amongst others, to discuss just that. Well, let's take that all apart with Martin Fregene. He's the Director of Agriculture and Agro-Industry at the African Development Bank. Great to have you with us today, Mr. Fregene. Now, of course, when we discuss scaling up successful innovations in agriculture on the continent, working with both the public and private sector, is the focus just on technology alone, or are we looking at a much wider pool of practices? What is the vision in terms of implementing large-scale adoption in agriculture going forward?
Thank you very much, Uche, for having me. And when we talk of innovations, of course, the most obvious things are things like improved seeds that we know have increased productivity by up to 10 times, for example, in maize, or increased productivity. That's when you compare those who use the best technologies and who don't use it, up to 10 times in maize, or maybe 8 times in wheat, and it goes on. And so that's one innovation that is obvious. Another innovation that is obvious is, of course, mechanization. One tractor can probably do the work of 100 men in a single day. But there are other innovations, and these are the ones that we're also looking at. One very obvious one is big data. For a minute, think about the speed and the quantity of data that is being generated and processed every day. For example, Facebook generates 5 petabytes. That is 5 million gigabytes of data every day. And that data is being processed, and people are finding patterns and using that to predict and not to solve problems. For example, in agriculture, big data is now being used to model the weather. So you can know exactly, you can predict the rains, and farmers can be told when to plant or when not to plant. Big data is also being used on agricultural insurance, and to help farmers, against the vagaries of climate change, against the unknowns of climate. Big data is also being used for agricultural risk indexing to help financial institutions assess how much risk is involved. It's also used for predicting pests and diseases. For example, we have the early warning wheat rust, a major problem of wheat all around the world. It's now a big data, artificial intelligence-driven prediction of wheat, early prediction of wheat rust. So you see that big data is actually becoming more and more a very important tool, as important as seeds or as mechanization or as inputs like a fertilizer. So this is one thing that the bank is also working very hard on. Another thing is innovation in digital agriculture. Digital agriculture goes from platforms like ICT-based platforms. One good example is Amazon in the US, but there are little Amazons all around Africa that try to bring buyer and seller of inputs, buyer and seller of produce, together without even meeting each other. Transactions are done also, payment is made all online. So we at the African Development Bank are trying to scale all those innovations, seeds, fertilizer, mechanization, big data for weather prediction, ICT-based platforms for better output and input markets. Thank you.
Well, let's talk a bit about that, because actually what you're discussing is how can we scale up these innovations that you just spoke of in order to boost Africa's agricultural sector. So give us a sense of the factors that will be critical to scaling up as we go forward.
Okay, there are three major factors. The first one is the technology itself. You must find a provider, a reliable provider who is able to demonstrate the technology so that you can create a demand. And also, a reliable provider that is also able to scale the technology so that it can reach many people. That's the first thing. The second thing is the policy environment. You must be able to have policies, if it's ICT you're looking at, you must have a regulatory policy environment for proper ICT. If it seeds, the same thing, you must have laws that penalize sale of grain as seed. So the policy environment is very, very important. The third thing, and also perhaps the most important, is political will. The organizations that scale up are either governments or the private sector. And for many technologies, it's always government that actually, is what I call the risk taker. They come in and begin the process, and then later on, the private sector comes on board. So those three things I just mentioned, the technology provider, the policy environment, and government, they are very key for scaling up. That is why today we brought together heads of states to make the political commitments. We brought together technology providers. We also brought together, experts, in the field of policy to see how Africa can scale the best technologies and make sure that farmers get a good return for their investments.
Now, I'm curious, of course, are there any success stories on the continent in terms of scaling up these large projects, or large scale scaling up and of course investing in these projects, partnerships as well between the public and private sector? Give us an example of this.
Yeah, Uche, I'll give you three very quickly. The first one is the Sudan. Sudan is a big wheat consuming country, but it's also a dry country. Even though you have, the Nile flowing through that country, but it's dry. So the wheat season, which is about now, is always, very hot. And wheat doesn't do very well. The traditional wheat varieties don't do well. So we scale heat-tolerant wheat varieties, working with seed companies, and working with many, other partners, like government, were able to produce 65,000 tons of heat-tolerant wheat, seeds of heat-tolerant wheat varieties, and we distributed them to farmers planted on about 294,000 hectares. And production of wheat in Sudan went up from about 300,000 tons to 1.1 million tons. That's almost a threefold increase, more than a threefold increase. And so what we have seen is that when you give the farmer the right seeds and the right training, and also provide them a market, they can actually boost productivity and boost production. The second example is Ethiopia. Again, in wheat. Ethiopia grows wheat on the highlands, the kind of better conditioned highland, but the country imports more than almost 2 million tons of wheat. So they're trying to expand wheat production. Again, in Ethiopia, what happened was that we gave them the same heat-tolerant drought varieties and the wheat varieties, and they were able to expand wheat production into the lower, hotter areas of Ethiopia. And today, Ethiopia has like 20,000 hectares in the lowlands. They're going to expand that to 200,000 hectares eventually. In Kenya, it was drought-tolerant maize seeds. Kenya is a country like most of the maize-growing areas where you have unpredictable, dry seasons during the growth cycle, and that can reduce yields. But science has developed varieties of maize that tolerate drought. And what we have seen is that in Kenya, we're able to work with the seed companies, 28 seed companies, to produce 8,000 tons of drought-tolerant maize seeds. And this was given to farmers. It increased their yields from 1.5 tons to 2.5 tons, even during the dry, periods, dry spells that you find in a growing season. So those three examples shows you that the bank believes very strongly if you have the right partners, have the right technologies, you can actually reach farmers and you can increase food production. You can make things better on the continent.
Well, before we leave you today, before we let you go, Mr. Frigane, as you discuss with stakeholders at the event today, what kind of commitment are you seeing from both the public and private sector to this going forward?
Well, I'm proud to announce that after today's meeting, 5 multilateral development banks pledged a total of $17.5 billion towards scaling up and other activities in the agricultural space on the African continent. For example, the African Development Bank pledged $1.57 billion to scaling up technologies and another $8.83 billion to also building the infrastructure backbone and also building agro-processing and other parts of agriculture. The International Food and Agriculture Fund, or IFAD, International Fund for Agricultural Development, IFAD, pledged $1.5 billion also for agricultural development. The Islamic Development Bank pledged $3.5 billion. This is all over the next 3 to 5 years. The Arab Development Bank in Africa pledged $1.5 billion, and the Gates Foundation and other donors pledged $675 million for R&D. So a total of $17.5 billion was pledged today. That actually makes me very, very happy. The political leaders, the heads of states also made commitments, political commitments, and financial commitments to support the financial, the development partners to ensure that success will be achieved in scaling technologies all across Africa in the next 3 to 5 years.
Quite interesting. Certainly lots of funding pledged at today's event towards scaling up innovation in Africa's agriculture sector. Thank you so much for your insights on the show today, Mr. Frigane. That, of course, is Martin Frigane. He's the Director of Agriculture and Agro-Industry at the African Development Bank. Well, let's shift focus now. Tonight, CGTN takes a look at how the coronavirus pandemic has dented the tourism sector across Africa. When the crisis hit more than a year ago, flights were grounded to limit the spread of the virus. Now, even though travel restrictions have since been eased and flights are back in the skies, some travelers are still skeptical, and it shows. Well, let's begin in South Africa, where statistics show that only 2.8 million tourists were recorded in 2020. That's a 72.6% fall from the previous year. Now, the recovery of the sector is expected to be dependent on the pace of vaccine rollouts and, of course, the severity of a possible third wave. Here's CGTN's Travis Andrews with more on that report.
Over the last 12 months, the COVID-19 pandemic has not only been costly to South African lives, but livelihoods as well. More than 170,000 jobs have been lost in the Western Cape's tourism sector, and many tour operators have shut their doors. The evidence of the downswing is clear to see. Many popular tourism-related activities in Cape Town have ground to a halt.
The initial thoughts around this pandemic was we needed to survive. Initially, we were under the impression of a 6-week period, then extended into a 12-week period, and obviously now we're into a 12-month period with a little bit of light at the end of the tunnel, but certainly a long winter still to go. So it's been a very, very challenging period. I would say probably the most challenging period for tourism in living memory.
With air access still restricted, some hotels still remain closed, while many restaurants have shut permanently and others have been forced to pivot. There is a glimmer of hope, though, because tourism authorities believe the country's vaccine rollout will spark a recovery.
What we identified is that the vaccine would be the game changer, because what vaccine rollout does is it provides confidence to travelers. So you may have received a vaccine in your own source, in your country, but when you want to go to another country, you want to know that those people that you're working with, engaging with, are also vaccinated. It's just about providing that confidence, and we believe that when we can get to a certain point as our vaccination rollout, and our key source markets are already far ahead with their vaccine rollout, we are beginning to see that point of inflection.
And with key source markets at advanced stages of vaccine rollouts, there has been renewed interest in inbound travel.
Search for Cape Town and South Africa has started to increase, so that's a positive sign for us. I think what's important is to make sure that we still stick to safety protocols as a sector, make sure that we adhere to this, because everything right now is about building travel confidence for people to come.
For now, though, many tourism businesses are seeking to keep their heads above the water, with the knowledge that surviving the last 12 months has made them resilient enough to hold out for another few. Most tourism stakeholders believe the fourth quarter of this year is when the industry could see a proper recovery that can retain jobs and create new ones. That is when the vaccine program will be far broader in South Africa and key source markets would have already reached their vaccination targets. Travis Andrews, CGTN, Cape Town.
Meanwhile, in Tunisia, a year since COVID-19 was declared a global pandemic, the country's tourism industry is still reeling from the crisis. The tourism-dependent economy saw revenues plunge by 65% last year. Now, as Adnan Shaushi reports, authorities have recently announced they will ease measures in an attempt to bring tourists back to the North African state.
Global travel bans and restrictions imposed by countries due to outbreak of the COVID-19 pandemic left the tourism and aviation industries facing an unprecedented crisis. The Tunisian economy shrank 8.8% last year, the largest contraction in the country's history, due to the effects of the crisis on vital sectors such as tourism, aviation and export. Players have now come up with a raft of measures that ease movement, eliminates quarantines and removal of curfews to attract tourists back to the country.
I've convinced a group of friends to visit Tunisia because the preventative measures are strict and the health protocol is respected. Now we can travel safely and visit any region of the country. The lockdown and travel bans have devastated the tourism and aviation sectors. I'm promoting the Tunisian destination. It's a personal initiative.
A group of independent businessmen and associations have set up a $2.8 million interest-free fund for the benefit of successful tourism professionals. This network is financing and supporting 500 entrepreneurs in the sustainable tourism, handicraft and heritage sectors during the COVID-19 crisis.
The loans will encourage youths to rely on themselves to create their own projects in the tourism and handicraft sectors. The importance of this kind of project is it's creating jobs and boosting development in the interior regions. Local initiatives are helpful during the pandemic because they support the state effort.
The Tunisian National Tourist Office, the Tunisian Hotel Trade Federation and the Tunisian Federation of Travel and Tourism Agencies have signed an agreement aimed at promoting local tourism. Industry professionals are launching this initiative to boost local tourism, which has been heavily impacted by the COVID-induced economic uncertainty.
I've invested in a tourist resort in a mountainous area during the pandemic, and I'm still confident. Domestic tourism will be the priority. Seaside tourism will also go through upgrading so as to diversify products, offers and services to attract international travelers. I've created 10 jobs this year. I believe in solidarity and social economy to overcome the crisis.
According to the aviation and tourism departments, the Tunisian government seeks to diversify the Tunisian tourism offer during and after the pandemic. Authorities aim to create synergies between the tourism, handicrafts, local products and cultural heritage sectors. The World Tourism Organization expects the tourism industry to rebound within 2 to 4 years. This vital industry contributes about 10% of Tunisia's GDP. Tunisian authorities are hopeful that both the tourism and airline industries will recover from COVID-19 within 2 years. Adnan Shaushi, CGTN, Tunis.
Of course, more installments on that COVID-19 series coming up tomorrow. For now, let's take a short break, still to come. The U.S. economy picks up in the first quarter as businesses reopen. And already reeling from the pandemic, Brazil faces yet another crisis.
It's just taken me completely out of my depth, but at the same time it's exciting. It's new, it's different, it's a challenge.
It's really exciting.
How will your world change today? What happens here? What happens there? Or what you make happen for yourself? If it matters to you, it matters to us too. Your stories are the stories that need to be told. Africa Live. Find your voice.
I try to not let it affect me, but there are days when it does. I'm a human being, and to see patients in a hospital bed and their family members are not there, there's no one there to hold their hand, that human touch, you know?
I just hope everyone can remember that the situation is not permanent and that everything will get better eventually.
Now to some international news. The U.S. economy is rebounding faster than expected after contracting sharply in 2020. The economy grew at an annualized rate of 6.4% in the first quarter of 2021. That's up from 4.3% in the final 3 months of 2020. Now, the strong growth was partly down to easing anxiety over the pandemic as vaccines have been rolled out across the country. This has boosted domestic demand and allowed businesses such as restaurants and bars to reopen. The Biden administration has also ushered through 2 additional rounds of COVID-19 relief money. Now, recently, the country also saw unemployment subsidies extended and qualified households being sent one-off checks for $1,400. And still in the U.S., President Joe Biden has proposed a sweeping new $1.8 trillion plan in a speech to a joint session of Congress. Now, his speech also marked his 100th day in office, and Biden has appealed to Republican lawmakers to work with him on divisive issues.
In Joe Biden's first address to joint session of Congress, the U.S. president laid out ambitious plans for education and health care in the country.
To win that competition for the future, in my view, we also need to make a once-in-a-generation investment in our families and our children. That's why I've introduced the American Families Plan tonight, which addresses 4 of the biggest challenges facing American families and in turn America. First is access to good education.
The new plan calls for $225 billion toward high-quality child care. Based on sliding scale, families may only pay a portion of their income toward child care services. Another $225 billion to create a national comprehensive paid family and medical leave program. $200 billion for free universal preschool for all 3- and 4-year-olds, offered through a national partnership with states, and $109 billion to ensure 2 years of free community college for all students. To fund this, Biden wants to overhaul the U.S. tax system, including raising taxes for the wealthiest Americans by just over 2%.
I will not impose any tax increase on people making less than $400,000. But it's time for corporate America and the wealthiest 1% of Americans to just begin to pay their fair share. Just their fair share. A lot of companies also evade taxes through tax havens in Switzerland and Bermuda and the Cayman Islands. And they benefit from tax loopholes and deductions for offshoring jobs and shifting profits overseas. It's not right. We're going to reform corporate taxes so they pay their fair share and help pay for the public investments their businesses will benefit from as well.
Republicans have argued the proposals will hurt long-term economic growth, but the president said spending was needed to keep up with China, which his administration sees a major strategic challenger.
In my discussion with President Xi, I told him, we welcome the competition. We're not looking for conflict, but I made absolutely clear that we will defend America's interest across the board.
It remains to be seen if Biden's argument will win bipartisan support, but recent polls suggest most Americans support increased investments in education and infrastructure.
Well, let's head to Brazil now. The country has reported about 3,000 new deaths from coronavirus, bringing the total fatalities close to 400,000. Now, it is the world's second highest death toll, but another crisis is also hitting Latin America's biggest country, and that's hunger. Emergency aid has been scaled back, and tens of millions of Brazilians are going hungry or facing food insecurity. Here's CGTN's Lucrecia Franco reporting from Rio de Janeiro.
Since March of last year, volunteers from Brazil's Central Union of Favelas, CUFA, have been receiving and delivering tons of food donations to some of the hardest hit areas of the country. But with a pandemic-induced recession continuing, businesses and individuals are increasingly unable to contribute to the charity.
Food donations have decreased by around 80% compared to last year, and we are fighting to help a growing number of people, especially in the slums, where the majority of people are not able to have even 2 meals per day.
CUFA volunteers here in Rio de Janeiro and across Brazil are distributing these reduced food donations in neighborhoods where drug gang violence is on the rise. It is a slow, dangerous process over an ever-expanding geographical area. Here in Moquiço Favela, 38-year-old Ana Angélica Ferreira, a single mother, takes care of her 4 children, 3 nephews and a granddaughter. She lost her job as a maid when the pandemic started and she's now penniless.
We are 9, the children and I, but we don't have any income at all. This is our reality. When I worked, the money wasn't much, but at least I could put some food on the table. Today we are only surviving because of donations. That's the truth.
Scenes like this are becoming more and more common in Brazil's urban centers. This man asks for a little rice to passers-by. The government's $100 per person per month emergency aid to the poor, which benefited millions of Brazilians last year, has been reduced by more than half or cut completely. According to a newly released study, 19 million Brazilians are experiencing hunger as a result of the pandemic, while 117 million, more than half the population, are living with some degree of food insecurity.
we're not surprised.
Conducted by Pensan, a Brazilian research network on food and nutritional security, the study shows the gravity of the situation.
The number of people suffering hunger, yes, that was somehow a surprise for being so high. The important aspect of this is that it took only 2 years for doubling the number of starving people.
With more than 390,000 COVID-19 fatalities, the second highest number in the world, and the pandemic showing few signs of improving, experts say they are worried that charity is now the only thing holding off an even worse humanitarian crisis in Brazil. Lucrecia Franco, CGTN, Rio de Janeiro.
You're watching Global Business Africa. Let's now take a quick look at commodity markets today. Copper topping at $10,000 a metric ton for the first time since 2011, nearing an all-time high as we see rebounding economies stoking demand and, of course, mines struggling to keep up. Meanwhile, oil prices extending gains today as bullish forecasts of recovering demand outweighed those concerns about the impact of rising COVID-19 cases in Brazil, India, and Japan. Gold prices reacting to the dollar weakening today. We saw them rising slightly. Well, let's move on now, heading to Uganda, where one young man is revolutionizing the way businesses attract customers by using 3D metal signage. Not only do the exterior signs draw attention, but they also create work opportunities for young people. Well, CGTN's Leon Senyange reports on Grassroots tonight.
For as much as $1,000, Sulaiman Mugajira will get your business seen from afar. His 3D pylon signs are the latest branding craze around town. The idea, he says, came from finding a long-term solution to road signposts.
Because we are in a tropical climate, we have a lot of sun. When it rains, it's too much. So some materials don't favor our climate. So people who do plastic always end up being disappointed. So me, I'm bringing a product that is solving a problem. Which problem people have? Durability. People want signs that are durable.
Most of the work starts here. A simple design on paper, the metal cuts, welding, and then the finishing. Mugajira says he can put out at least 2 pieces a week, but he admits it can be overwhelming because of the growing demand for this kind of signage. To get work done in a short time, Mugajira has employed at least 10 people at his workshop. He says giving opportunities to the young people around him is helping his business.
I believe that demand is there, but as long as we are training people to do things faster, I think we can really satisfy the demand.
Working here has helped transform Jonah Kayabochi's life. The teenager dropped out of school many years ago, but is now a master at his tasks.
Working here has made me mature fast. I have something I can focus on. I am busy all the time.
Mugajira has seen his clientele grow in a short time, but there have been many entrepreneurial lessons to pick up along the way.
An entrepreneur is someone who stands up in the morning, faces all the miscarriages, faces all the disappointments, faces all the losses, and puts up a product or a service or a company in order to wait for returns.
Mugajira's hard work is already paying off, and with the plenty of opportunities to improve the business further, he's certain his signs will continue to adorn the streets of Uganda. Leon Senyange, CGTN, Kampala, Uganda.
Now in South Africa, Chinese ride-hailing app Didi Chuxing has hit the streets. Didi officially launched its service in Cape Town recently and has already signed up over 2,000 drivers. Here's CGTN's Travis Andrews with the details.
With over 10 billion trips a year, China's Didi Chuxing is a global leader in the ride-hailing industry. It's now entered the South African market and is taking on competitors such as Uber, Bolt and Taxify in Cape Town. More and more drivers from other ride-hailing services are now beginning to turn to Didi.
Didi will benefit the industry a lot, in the sense of
Like nowadays, Uber hasn't been that much busy. So with Didi being there, it helps us having another extra income. As for now, they've got much promotions that is favorable to us as drivers compared to Uber nowadays.
Didi has entered the market with a strong focus on passenger safety, which is important in a country that has high levels of crime. The app features include an SOS button for passengers, a 24-hour hotline, and linking drivers to the police. The company also does not charge its drivers a commission fee, so all the revenue from the trips ends up in their pockets. And there's more.
As a client, there's almost 250 rand promotion if you a new driver, a new client you sign into Didi. So they will give you like 250 rand, which is like a bargain to us.
The South African ride-hailing market is currently saturated though, so it's a tough environment for many. Now, ride-hailing apps have been market disruptors in Cape Town and haven't been particularly warmly welcomed by the entire industry. Metered taxi operators feel particularly aggrieved because they believe they've been left out of pocket.
There are too many Ubers, and Taxify, InDrive is also a new one now, and Bolt. So they're taking most of the work away from us. And like I said, many of them are illegal. There's some of them that came then, they were issued with operating licenses, quite a few of them, but there are still those ones that doesn't operate with operating licenses.
But with Didi's emphasis on passenger safety locked into the app, this will mitigate illegal driving and all in all offer a much safer experience for the passengers. Travis Andrews, CGTN, Cape Town.
Well, before we close today, a quick look at Africa's currencies. South Africa's rand strengthening 0.3%, its highest since January 2020, extending a stellar run that has seen it become the best performing emerging market currency over the past 12 months. Meanwhile, Nigeria's naira trading within a range of 410 naira to 422 naira to the dollar on the over-the-counter spot market. That, of course, was after the central bank last week repriced its futures rate upwards and sold dollars to foreign investors. It was quoted at 485 naira per dollar on the black market, a level we saw it touch last week. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.